Good day, Industrial Advisor listeners, and thank you for tuning in. If you have not subscribed, please do so by clicking subscribe wherever you podcast. Click the like button and hit the bell if you want notifications of when we put up new content. Leave us a comment about anything we discuss here today or general comments about the show. Now, let's get into it.
Welcome to our Industrial Advisors podcast. I have Bill Condon and Matt McGregor, and we're sitting here right after the first of the year, and we're going to talk today about 2023 in review. And we'll start with some dynamic factors and then a prediction for the upcoming year. So
14-0 and national championship. That's
Huskies.
my prediction.
Yeah. What a game. That was an awesome game.
That was great. That was great.
Yeah, what a cool thing, man.
One more to go.
National championship, man.
That is.
Penix is just so poised. It's awesome.
Man, that was his best game of the year, wasn't it? Texas.
He looked great, man.
Listeners,
awesome.
This is in a few days. So actually, this will come out right before the national championship. So
yeah, so we'll see. All right, so first dynamic factor that we want to talk about in 2023 that took place is the growing inventory, and this is no surprise, but the growing inventory and vacancy in the 100 to 200,000 square foot range. That vacancy in that particular segment of the market is over 8% vacant right now. And there's a growing number of buildings. I believe there's over 50 buildings available in that size range in the Kent Valley throughout Thurston and Pierce County. So that's a lot of inventory.
Yeah.
And we haven't seen that vacancy that high in some time.
Yeah, I mean, it would throw back to the 50 to 70,000 foot range in kind of 2009, 10, 11, where we had like 3.5 years of inventory. Unfortunately, this was a terrible quarter for the 1 to 200,000 feet because we were making progress. We started tracking this problem about 1.5 years, almost 2 years ago now, when we started noticing a growing inventory of it. And I remember the first time we counted it, it was like 28.
Yeah, it's like doubled.
Well, it went to 49, and then it dropped down to 43, and I thought, wow, we're making all, and then subleasing came on.
Yeah.
And more buildings got delivered, and now all of a sudden we're at 51. And it's like, gosh, we were making positive strides there, and now we had a setback.
Yeah. So that is something to definitely keep an eye on. You know, from a market standpoint, we've seen in Q4 of this year, because of that and the way things have gone, definitely concessions were going up significantly in that size range. But now you're starting to talk about, getting more aggressive on rates, broker incentives, other incentives. And so that'll be an interesting one to watch and track as we head into Q1.
Well, and we saw $1 million potential broker incentive right in that size range, right?
Yeah, that just came out yesterday.
Which was crazy, right?
I didn't notice it, but you did. So, what a statement.
We've seen a lot of stuff. We've seen increased fees, percentage-wise, but $1 million bonus, that's unique. I've never seen anything like that.
Yeah, so let's talk about, some of these submarkets. Another dynamic factor that we want to talk about was that in 2023, the Kent Valley and the North End were the only two submarkets that had positive absorption.
Yeah, and it was only one deal in the North End, right?
Yeah.
And unfortunately, that deal, I don't want to say it's not being represented right, and we're talking about the Amazon deal up north of Everett, Marysville. That deal is accruing for like 2.6 or something million feet because it's a triple decker, but it's really only an 800 and some thousand footprint, right? So the way it's being totaled, I don't love that.
Yeah.
Right.
Yeah.
Because it's not really that.
Yeah. And so it's just an interesting factor given, 21 and 22 were record absorption years. And then to, go back a little bit was an interesting one to look at. But that's, I guess, not shocking given the years that we had just, previously had.
Yeah. So total absorption, really we're looking at market wide, just under 1.5 million feet, 1,474,000 and change of positive absorption. However, we are accruing a couple deals that were signed and are not occupied. So the actual absorption would be closer to about 500,000 feet. When we look at those deals, we're new to the market. They're not giving back any space. So we're looking at that absorption just under 1.5 million feet market wide.
Yeah, and like you said, a big part of that was the North End deal that you referenced.
Yeah, you pull that out and we're upside down
Yeah.
for sure.
Yep.
And then you really look at the numbers of it, and it's a hard one to wrap your head around because the numbers don't exactly tell the real story.
Right. So one of the markets I think that's an interesting one to look hard at right now is South Seattle. There's a lot going on. You have a couple multi-story buildings that are up and vacant, and then you have a 2-story beautiful building that Trammell's building.
That's going to get leased.
700,000 square feet, 350 approximately on each floor. It's a great building. It's interesting to look at. It's a market that, generally speaking, has not been a market that's attracted large tenants. So it's a big bet. Now, obviously, the location is as close in as you can possibly get.
Can't get better.
You can't get better than that. So
probably couldn't have designed it better either.
They did a really nice job.
For sure.
They did a really nice job. So your prediction is you think it's going to get leased?
If I'm a betting man, I would say I bet you $100. Half of it is leased by June 1, potentially more, but I'm going to say they're going to stay ahead of Performa.
Yeah, I'd like to see that for the market.
Yeah.
I don't know if it's going to happen. You have to find, there's not an abundant amount of tenants that are out there looking for 350 plus in South Seattle right now.
It's just such a unique positioned building and so well designed. I would say that's why I'm saying somebody's going to figure that building out.
Yeah. Well, and to your point, you look nationwide, it's probably maybe the biggest building closest in across the U.S., right,
Yeah.
to a downtown CBD.
Absolutely. Somebody's going to figure that building out. But to your point, you look at South Seattle at 7.7% vacant. It's just been climbing quarter after quarter, now year after year.
And that vacancy doesn't include what's under construction.
Correct.
Yeah, so that you deliver.
It's going to jump.
You deliver another $1 million. They got 1.1 under construction in a 47 million square foot market. That can have an impact.
So we've been talking about the South Seattle thing for a while now, several podcasts. What's going to be the result? Because it went from the market that never changes. It's, 2% vacant in a normal year. It's 3.5% in a bad year. I think in the downturn, it never quite ticked above 5 back in 2009, 10, 11. This is a substantial change, and the tenant demand is saying, we don't value South Seattle anymore, right? So what's going to have to change? What's going to fill some of these ones that are now sitting, unfortunately, well-designed buildings, again, Track 6,
Yeah.
Horton,
Yeah.
65 South Horton. What's going to fill these buildings, and what's going to change it?
Some of the surrounding factors outside of the real estate decisions.
Political stuff.
Political, safety issues for employees with, there's still a real big homeless issue down there.
No question.
Drug issue down there.
Yeah.
Amenities, right? Like there's not a ton of restaurants that are down there that are easy to go walk to that are close by, right?
Tough roads to get
you don't
in
want to
and
walk
out.
4 blocks in South Seattle to go to lunch.
No.
You're going to pass all kinds of stuff you probably don't want to pass, right? So I think that there's that part. I think that the labor and finding good quality labor for those type of buildings is a bit of a challenge as well. So I think some of those landlords are going to have to get more aggressive. And
they're going to have to compete with the Valley.
Yeah, look, this isn't the only market that some markets have seen success on building multi-story, but this isn't the only market where multi-story buildings are sitting vacant.
No, it's a problem.
Yeah, and so it's not for everybody,
Mm-mm.
but I get why people do it when they're close in.
Well, and it made sense when the vacancy was ticking to very low single digits in our market and others.
Yeah.
Right? And then, of course, you're going to build multi-story and you're going to get creative. But now the tenants, the demand just isn't there.
Yeah, and if I was in South Seattle, I would be very aggressively going after a variety of different deals, meaning I would be looking at, if I had a 200,000 square foot building, I'd be looking at everything 25 and above and piece it together if I needed
smaller,
to.
Yeah.
Or smaller. That's a market that, generally speaking, the average size deal is 15 to 20,000 feet. So go chase those deals.
That's right.
So we'll watch South Seattle closely. And, look, all of a sudden someone comes and leases a 700,000 footer, the stats in that market will look a lot better.
That's right. Well, and if you look at it historically, the other thing that happened, you made a great point on the political stuff. If you pulled back pre-COVID, that South Seattle market was always about 20 cents and I'm not talking new product because there never used to be new product in South Seattle. I'm just talking existing product versus existing product. It used to be 20 cents a foot on average higher than Kent. Then all of a sudden it shot up to 40, 50, 60 cents more.
Right.
They're going to have to adjust.
Yeah.
Right.
Yeah. No, and some of that product too that's sitting is older product too. And so that creates a bit of a challenge as well. I think a bright spot, honestly, looking back at 2023 is the new product in the Kent Valley. Now there's not a ton of it, right? But the stuff that was built performed extremely well.
That's right.
They crushed it on rates, all the new projects that were built down there. And so I think the Valley, when you look at it, that the stats may not tell as good of a story as that market really had throughout 2023. It had a good year.
Kent's had a good few years in a row. And I will say the new product in the north end, whether it be Kent, Des Moines Creek, those areas, that's what gutted South Seattle, their large tenants, right? Yeah. And that product has always done well because there's not a lot of room for those type of developments. And so it's always a fleet and the nicer product in those areas because there's not a lot of nicer product. It's not like Frederickson or Sumner where every building's a nice new building. Flight
to quality. The tenants were willing to pay $120, $125 on the shell for new buildings in Kent.
That's right.
And boy, I think a good example is the Panattoni project that they built. First deal they did was at 82 cents. The last deal they did, I think, was at $120 or something. And over whatever it was, 1.5, 2 year stretch. So impressive.
Yeah. Why do you think it is, and maybe I don't know if you'll agree with this, but I've had this conversation with a couple people. Why do you think it is Auburn is a little slower on that type of product to lease up than Kent or Sumner?
Yeah. I think Sumner, Kent's definitely the most proven submarket.
Sure, closer into the population.
Everything, right? In our entire market, right? So if you could build new product anywhere, you might build it in Kent, right? Kent's got the most tenant demand. It's got good labor. Same with Sumner. Sumner's got a good labor base. Sumner's another market, I think, that's probably right below Kent from an activity standpoint. Auburn isn't as built out as those other two markets. Auburn,
kind of a tweener.
It's in between.
The ports,
the location's fine, but the amenities aren't great in Auburn. I think that from a zoning standpoint, it's been a challenge to deal with Auburn. They have not been as pro-industrial as those other two markets,
for sure,
Kent and Sumner. So that plays into it as well. So I think those are some of the factors why it hasn't performed as well.
That's a good point.
So third factor we're going to talk about, lack of land sales. And we've had this incredible boom of land sales and development sites really over the last 10, 15 years. And, this year we just did a little research and there's basically only 2 sales of industrial land in our market.
North of 10 acres.
North of 10 acres in 2023. And one of those, most of the site was wet.
It was more of a wetlands bank deal.
Yeah,
right.
Exactly. And the other, I think, was a user purchase.
Right. So you could, arguably say there were no land transactions that were worthy of investor grade. Hey, we're going to build a building on this, or we're land banking it, or whatever for development. So there were no deals prepping for future development.
Yeah. Yeah. So that'll be an interesting one to see how that market bounces back in 2024. I mean, it's only got one way to go.
Yeah, when you were pulling that statistic, I was shocked. Yeah. Because I would have never guessed. If you would have asked me before you told me that there were 2 land transactions and really no investment ones, if you would have asked me to guess, I would have said, there were 6.
Yeah.
Right?
But
I would
didn't
have
you start thinking
0.
You start thinking about it, and I'm like, I don't remember a land sale.
Right.
Of size.
Absolutely.
So that's an interesting thing. That's probably never happened in our careers.
No, not on land. I can't imagine.
Yeah.
Yeah.
It's probably the first year we haven't sold a site over 10 acres in our so
yes.
Yeah.
So then how does that play out? Like you missed a year of entitlements, and that's going to show up in a couple of years.
Exactly.
Yeah.
2-3 years down the road.
Yeah.
You'll see the impact, because it's not like there's a bunch of sites that are out there that are ready to go and you can go, put a building up in 9 to 12 months. I mean, we've been working on the golf course for, however many years.
11?
And we're trending in the right direction and we're getting there. We are getting there. That's going to be a great project.
We're there.
Yep. I can't wait
we're there.
to
we're putting out proposals for those people listening.
Yeah.
You got a 1 million footer, you got a 400, 500,000 footer. We're open for business.
Maybe the best site left on the West Coast. I don't know. Maybe. Yeah.
It is.
Yeah.
That's right.
It's awesome. It's a great site.
And then your one prediction.
Well, this isn't a crazy prediction because we had such low investment volume.
Well, let's talk about investment volume.
Yeah.
Well, go ahead and finish the prediction.
So the prediction is investment volume will remain slow in the first half of 2024, but will increase substantially in the second half. I think there's already been money on the sidelines for a while now. And I still think we're not there to where people are rushing back, but give it 6 months and there's going to be a rush to get back, especially in markets like the Puget Sound and port markets like, Jersey and Savannah and Southern California. I think, flight to quality on the investment side will be coming back as well.
Yeah, I'm amazed how thin the buying pools have been.
Yeah.
But here's the statistic for 2023. Investment sales, 22 deals totaling $373 million, averaged of $229 a foot.
Yeah.
So
that's down from $2.5 billion,
Yeah. I think
past.
we were averaging for, if you took like the last 5 years minus this, last 7 quarters of downturn. But if you took the previous 5 years, it was like 1.8 billion annually. So 373 million doesn't sound like a lot, that 22 deals. So they're small deals too, right?
Yeah.
And the pounds per square foot is crashing.
Yeah.
And so
it's all related to debt,
Yeah. Yeah. So, there's a lot of optimism about rates coming down into the new year, later this year. And so, I would agree with you that it has to come back. People can't be sidelined forever. They're just waiting. They just don't want to buy when it's falling, right? They want to make sure, are we close?
Yeah.
And are we starting to recover?
Well, the other thing I really think a big reason why maybe it is so low is during the first half of this year, even into kind of Q3, there was still a disconnect between buyer and seller, right? Mm-hmm. Sellers didn't want to sell below a certain price. It would still come out to market thinking, okay, well, maybe we can achieve this. Now, I really believe that sellers, when they bring something out to market, are realistic on where pricing is today because they're also looking at acquisitions as well. And so I think that, the percentage of deals that traded in 23 that got brought out to market was historically probably the lowest it's ever been.
Mm-hmm.
I don't think that's going to be the case in 2024. I think the buildings that come out to market are going to trade.
Yeah, well, I agree. It's easier to price, I think, now when it's not moving as rapidly.
Yeah.
And I think, honestly, brokers are being a little bit more truthful about pricing because they don't want to bring something out to market and fail to sell it.
Yeah, it's fun. It's kind of funny. On the leasing side, we had a really nice year, but our sale volume is reflective of what the market did too. We didn't do a lot, but we had a $35 million deal that was supposed to close at the end of the year. And, true to 2023, somehow the escrow company got hacked and the deal got pushed and finally closed, but it got pushed into 2024.
Unbelievable.
But it was hard to close an investment sale in 23.
Yeah, that's right. Well,
it found a way to go around.
You know me, I like that it pushed. I like to start the year strong, so I didn't mind that.
No, the nice thing is we have a handful of deals that we'll transact on in the next 60 days that are sales. So that's good to see some more aggression out there as well.
For sure. Well, 2024 is going to be great. Happy New Year. And thanks for listening.
Yeah. Go Huskies. Hope they get it done.
Dogs.
And I'm optimistic about 24.
For
I
sure.
really am.
So am I.
Thanks for listening.
Thank you very much.